Hey everyone, welcome back to the channel. Today, I want to talk about everyone's kind of favorite meme stocks, AMC and GameStop. If you've been following the stocks or following them over the last year and a half, you know they're widely volatile. We can just look at the price charts for both GME and AMC, and we can see, right, if we go to the last 2 years, GME spiked over 300, immediately followed by kind of a sell-off back down, and ever since then, right, we've seen it spike up over 200 on multiple occasions. AMC has actually done very similar things with a lot of ups and downs, and held pretty steadily above $20 ever since. That was until kind of the start of 2022 or so. So Monday, shortly after the market opened, we saw both AMC and GME start to sell off. It's trending very similar now to the broader market, but in a much more extreme way. So the S&P is down 5.5% in the last month or so, and GameStop and AMC are both down 37% and 28% respectively. So Monday has actually been one of the worst days for both of these stocks. So for GME alone, if we look at the price chart here, we'll see it's down almost 16% on the day, and AMC, very similar thing here. It was down 5.2%. While the S&P in that same Monday period was only down about 1%. So I guess this poses the question if the broader market turbulence in the stock market, is this finally scared retail investors and caused them to close out their positions in meme stocks? The ones that they've loved so much over the last 2 years. I'd say things are starting to trend that way. There's been a couple things that I've noticed so far that I'm going to quickly talk on. That relate to why I think that this is kind of the end of the meme stock era. And for GameStop, if we look at the trading volume and daily percentage loss, along with kind of the resistance level, I think, there's some pretty alarming signs we're seeing here. So if we actually look at Monday's trading volume alone, so Yahoo Finance has this great historical data tab, and you can see the volume here. Monday alone, we are seeing almost 4.5 million shares trading hands. And compare that to over the last month, we've seen a lot closer to about 2 million shares per day over the last month or so. And the reason I think that this is so alarming is a lot of the retail investors have been doing what is called direct registration of their shares. If you're not familiar with this, in essence, what it is normally when you buy a stock, it's registered to the broker dealer on your behalf, but the broker dealer can then let someone short sell it. So someone else can then go ahead and sell that stock, take the profit with the promise to pay back a share later. So this increases the float in number of shares being traded. When you direct register, kind of the opposite happens. What happens is the share is now registered in your name, but the broker is the custodian and still holds the share, kind of in their electronic record keeping. But when this happens, what will happen is like GameStop would then send you voting information directly. You wouldn't get it passed through from your broker. And same with like a dividend check would come directly to you as opposed to going to your broker and then being deposited into your account. So the reason why a lot of GameStop investors have been direct registering is basically it makes it so a broker can no longer sell your share short. So someone else can't borrow your share to sell it, which increases the trading volume. So basically, if we continue to see this volume increasing, what this is telling me is that a lot of retail investors are actually probably exiting their positions. A large number of shares have been direct registered for GameStop. So it's hard for institutions to buy and sell shares when the float has basically been decreased due to retail locking these up in a direct registration environment. So I think it's pretty alarming to see that the volume is starting to spike. We'll see if that continues in the coming days and weeks. And if it does, I think, that could be a sign of a lot of retail exiting their positions. But the second and more alarming trend I think I've noticed is the daily percentage change in GameStop share price. Since we'll call it the meme stock revolution has taken off back in the fall of 2020, GameStop has only dropped 10% or greater, roughly 10% or greater in a single trading day on 30 occasions. So I think I took 9.5% up of a daily decrease in price. It's only happened 30 times in roughly the last year and a half. This year alone, through the first 2 months, we've actually seen 6 of those 30 occasions. And 3 of them have actually happened in the last week alone. Or last 2 weeks, since the start of March. So we're seeing a lot of downward pressure on GameStop that I think is, it's very much correlated with the broader market trends that we're seeing with big sell-offs, but it's much stronger. So we're seeing a much stronger sell-off in GameStop. And I think, seeing that in this last, year and a half of data, that if only 30 times the stock has dropped 10% in a single day due to volatility, but 20% of that's happened this year alone, that doesn't seem very good. And then I think the last really worrying sign is if you actually go back to their price history, after, I think it was January 26th of 2021, they crossed, actually, I think I have it here. Sorry, a couple different files. They closed above $100 a share for the first time back on January 26th. So here it is. They closed at $147. Immediately after that, it sold off at the start of February. And for the month of February, it basically traded below $100. But after getting back above $100 in February, hasn't traded below $100 a single time until 2022. And so far this year, we've seen 7 days where it's actually closed below $100 a share. So I think we've kind of crossed that threshold, that price boundary of $100. So I think we're going to continue to see downward pressure here. So ultimately, I think if the market continues to stay down, it's not going to look good for meme stocks. I think this could be very well the end of the overinflated, GameStop and AMC share prices. I think with larger global conflicts, if they're not quickly resolved, right, it's only going to be bad for the broader market. But for meme stocks in particular that have been artificially increased in value, it's going to be even worse. And we're going to see probably faster and sharper declines in stock price than we do the broader market. Ultimately, though, I do believe it's always been a matter of time until these companies drop back down to normal valuations. And, definitely a lot of credit to retail investors for keeping these stocks propped up for as long as they've been able to. But ultimately, the business models of both AMC and GME never fundamentally changed. GME put out a lot of great press and NFTs and, tried to draw a lot of hype, and they both raised capital very cheaply through equity offerings, things like that. So yeah, they were able to pay off debt and, improve their balance sheets, but ultimately they didn't fundamentally change the business, and they didn't change the growth trajectory of them. So it was only a matter of time until these sky high valuations would drop back down. I would say if you're still in these positions, you truly have those diamond hands. It's been a crazy ride, that's for sure. Hopefully it doesn't end just yet for you guys. I would love to see another bump in the stock price, but I think a lot of signs are pointing to that this might be the end with the broader market selling off. I think meme stocks are going to be punished even more. So anyways, I think it's pointing to the end of the meme stock, but I guess we'll see in the coming months. But as always, leave any questions or comments below, and I'll try to get back to you. Thanks so much for watching.